Good morning, and thank you for joining us today at InvestSmart Fest 2021, an initiative by the Securities Commission Malaysia. I would like to take this opportunity to thank SC for inviting me and my fellow panelists to have this conversation on ECF and P2P, alternative funding for businesses and investment opportunities for all. Without much further ado, I would like to introduce you to my fellow panelists. I will start off with Mr. Andre Badker. Andre is the Chief Investment Officer of FBM Crowdtech Sdn Bhd that operates Alexco peer-to-peer financing and FBM Malaysia's equity crowdfunding platform. Next, we have Mr. Bikesh Lekmichan. Bikesh is the founding partner of Lead Capital Sdn Bhd, an equity crowdfunding platform. And finally, we have Mr. Brian Leong. Brian is the Chief Financial Officer of CrowdSense Sdn Bhd, a peer-to-peer financing platform. Thank you for joining this session.
Thank you.
Before we begin our conversation, I would just like to inform that we will be having a pop quiz at the end of the session, where you will stand a chance to win e-wallet reload pin. So please stay tuned till the end of the session. And also, if you have any questions that you wish to ask to our fellow panelists, you may do so in the portal. Perhaps I will start off with providing a quick background on equity crowdfunding platform, or also known as ECF, and peer-to-peer financing platform, or also known as P2P. And ECF and P2P is an innovative form of alternative fundraising and financing that allows small businesses and entrepreneurs to raise capital from the public. ECF is essentially a fundraising campaign where people invest in a company, commonly SMEs, in exchange for shares in that company. P2P, on the other hand, allows businesses to borrow and investors to lend capital. So when ECF and P2P was established in Malaysia, it has helped narrow a massive funding gap by providing an alternative source of capital for micro, small, and medium enterprises to fund their business expansion, finance working capital, and meet other financial requirements. Just to provide a quick statistic, since inception, cumulatively, ECF in Malaysia has fundraised RM 294.21 million, benefiting 203 issuers through 214 successful campaigns. P2P financing, on the other hand, had raised RM 1.67 billion, a total of 3,533 issuers have successfully fundraised via 22,479 campaigns. I'm sure ECF and P2P space just got more exciting with the numbers. So as part of initiatives to generate greater awareness of capital raising and investment opportunities, I would just like to understand who can actually raise capital or become an issuer on an ECF and P2P platform. Perhaps, Andre, can you provide some insights on this?
Right. So P2P and ECF, like just you heard right now, is a very recent, still in recent years, method for especially SMEs to raise capital, to raise financing. That there are also only certain businesses allowed to raise money on this platform. And those businesses are non-public businesses. This is very important. Let's say, for example, if you're in Sdn Bhd, or if you are, let's say, an enterprise, then you are free to come to us and to apply for financing for P2P and ECF. But this doesn't go for the big companies. So this is very much actually a tool for smaller private companies to raise money.
All right, that's great. I would just like to give a scenario. For instance, if a company decides to raise fund and perhaps they come across Lead Capital's website, is there any entry requirements before they can build a campaign on the platform? Bikesh, maybe you can share with us, how does it work on your platform?
Yeah, sure thing. So like Andre was saying, right, any Sdn Bhd, any LLP can raise. We're quite selective on ours. One thing to also know is if you don't have an audit, then as an issuer, you're kind of limited to a raise of 500,000 ringgit only. And if you have an audit for ECF, you can go above that, and the cap is 10 million for now. And there's talks about that being kind of extended to a 20 million raise really soon. For us, we really want to make sure the issuers has got a game plan. So we will ask them things like a pitch deck, the business plan, the financials, their forecasts, the projections, the assumptions. We really try and basically operate it like a typical investment banker trying to do a pre-IPO.
Okay. So for instance, if a company decides to get funds through insurance premium financing and asset financing, how much they can raise on your P2P platform, Ryan? Because I noticed that P2P have wide spectrum of financing. Perhaps you can share on this a bit more.
Okay, that's a good question, Darwin. I think as Andre has pointed out earlier, the intention for P2P and as well as ECF, it's more on the SME centric. So the funding that these two platforms are providing are more mainly for the SMEs and for the non-public listed companies. Now, if you ask me about what are the quantum that probably these companies can raise on the P2P financing platform, typically will be depending on a few factors. But if I can name a few, we can take an example of number one, what's the funding requirement or the utilization of proceeds that this SME would need to fund their funding requirement. And second, most importantly, is to also be backed by their capability of repaying that loan itself. Okay? So taking these two factors, then the P2P operators like us will typically come out with what would be the sufficient or acceptable financing that this SME can actually raise on our platform.
I see. Okay.
To add onto this real quick, just
Yep, sure.
recent statistics by the SC show, even though for P2P there's not a hard limit in terms of how much you can raise, but more than 93% and 94% of businesses actually raise less than 200,000 ringgit per campaign. So it's very much focused on the smaller range between 30,000 to about 200,000 ringgit for each financing campaign.
All right. Okay, so I think with that, it brings me to my next question. As we all know that COVID-19 pandemic has severely affected the sustainability of startups in Malaysia. So companies, especially with less than 3 years of operations, are faced with various challenges, tapping into funding facilities as banks would most likely prioritize on existing customers with good track record. As such, an alternative avenue for funding and financing is definitely necessary for them. So I would just like to understand, would companies like this still be able to participate and benefit from building a campaign on your platform? Perhaps Bikesh can take this question.
Yeah, definitely ideal, right? But the whole idea of raising funds is don't raise funds when you need it. Raise funds when you don't need it. If you're raising at a time of desperation, I think that's also gonna put the retail investors away because this is something brand new for them. They're trying to get into something a bit more risky. So you need to make sure that everything looks good in the books. If it's not so good because of the current situation, how do you sort of like give them the confidence that it is just a mere setback? You have plans that's put in place, some kind of controls that's put in place to basically kind of ride the storm now, but flourish right after. So what you're looking for is capital to help you during this crunch time, but you have some key things that you're going to do after. So a lot of it is all around storytelling, the equity story, right? And the equity story holds weight when they can look at how you've run the organization in the past history. So it works for companies who've got a track record. So 2-3 years is enough to build a track record. But if you're a fresh up startup 6 months down the line and you're looking for funds, not impossible, but a bit more harder in terms of trying to sell that fear of missing out story, trying to show that opportunity on how this is a bullish thing that you're riding. And you got to get on the bandwagon right now to kind of ride the gravy train.
All right. So in addition to my earlier question, so for companies that are affected by COVID-19 pandemic, right, has there been any relaxing policy or aid being offered? Like perhaps do you see any issuers seeking to defer or reschedule their repayments? Perhaps Brian, would you like to take this question?
Yeah, that's a good question, Davin. So in our situation, we actually look on the case-to-case basis. And thankfully, so far, when we engage with the respective issuers that raise financing on our platform, they do affect it a little bit, but not to the extent of requiring a relaxation in terms of the repayment. So again, for our case, it's more on the case-to-case basis. Yeah. But for the benefit of all the audience here, for us, we always look into carving what will be the best situation for the issuer in case if they require like certain financial restructuring and etc. But what we want to focus on is that, yes, we want to help the issuers in ensuring that they could go through this COVID-19. But at the same time, we also want to ensure as well that on the investors' perspective side as well, they are protected in terms of their investment. Yeah, so we just want to balance off between these two at the end of the day in managing this COVID-19 situation.
Right. Is there any kind of consultation or any kind of advice that you would provide to your existing issuers?
So we do engage on a more close case by case basis for each individual investors, inquiring what is the situation of them during this pandemic, and then partially also I think we are practicing a little bit like cautious in addressing or assessing new issuers that come to our platform. So yeah, so based on that two things that we have practiced, I think so far we are kind of helpful that in this situation that we can manage through in behalf of the issuers. So what we have done is that we continuously engage with the issuer to see what will be the best solution in terms of fulfilling their payment need at the end of the day.
All right, that's great. Okay, so the Malaysian Co-Investment Fund, probably I'd just like to touch base on that. So was set up as part of Belanjawan 2019 in order to co-invest in micro, small and medium enterprise alongside private investors via ECF and P2P platforms. So by end of 2020, MySafe has co-investors a total of RM 165 million in 5,349 ECF and P2P campaigns, which had benefited approximately 1,197 MSMEs. So based on the stats, we can say that MySafe was successful in assisting startups and MSMEs. So to meet their funding needs in this challenging post-pandemic economic recovery. So since all the operators here are participants of MySafe, so according to you, what this means for companies or issuers, and how do you think they can benefit from MySafe? Perhaps Andre, would you like to take this question?
Yeah, this has indeed been a very big boost, not just to the P2P and ECF industry, but also to issuers. They are very happy to hear when we tell them that the government is co-investing 20%, because they can use this additional capital to further grow their business, to hire some new employees, to expand into new areas. And one thing I would like to highlight also, especially last year, the SC has been very helpful in setting a higher limit for the co-investment during the COVID-19 pandemic, which means we had not the usual 1-to-5 ratio. It was we could allocate a lot more, basically 1-to-2 basis. So this really helped companies bridge the financial crisis at that time, since we didn't have that many investors as during normal times, but the SC really stepped in here to help smoothen out this process. And I think one additional benefit as well of having the government co-invest is it incentivizes the issuer more to have a proper repayment schedule in this way. This might be more of an implicit kind of benefit, but there is still a benefit. So overall, it has tremendously benefited the industry.
Okay, so I think difficult times like this kind of initiatives can definitely boost both a company and investor confidence in ECF and P2P space as well. I would just like to understand from an investor point of view, what do you think they look for from company or fundraisers? Is it the company's potential growth, or is it expected returns, or is it the environmental, social, and governance, also known as ESG impact? Brian, would you like to take this question?
That's a very, very good question again, David. I think we are quite blessed in a way that in Malaysia, our investment community as a whole are actually quite robust. There's a lot of support from the regulators as well as the education. So for the investors in Malaysia to learn, to study, and in fact to upgrade their financial knowledge. Okay, so what we have seen so far is that when they come in and assess certain issuers or investment note that we hosted on our platform, we noted that they tend to assessed on an overall basis. Okay, so I was actually quite surprised as well. Like they typically would ask in depth. They're not just focusing on like a certain segment of that particular investment. So for example, they would not just focus on the return, but they also assess how would this certain investment not fare in terms of the risk. So on an overall basis, what I can see is that the current assessment that typically investors look for, I think, is more on the overall basis. So they would combine return risk as well as the tenure in order to match their investment duration at the end of the day.
Okay.
Let me just
maybe,
add a little bit. Yeah,
sure.
From ECF, the ESG element has kind of recently surfaced. I think people are kind of keen to see impact. In fact, we're seeing a lot more issuers that come from a green, sustainability, and ESG point of view. Maybe it's just more for us. We've been attracting a lot of those issuers, which is nice. And then when we did a poll with the angel investors, they all love it. They all want to invest into something that does good. But also the investor hat is still on, right? They want to see expected returns.
Yeah.
So when it comes to retail investors, they expect to see some form of returns faster. I think they want to see the form of dividends, etc. So then the instrument is important, right? Preference shares. But if you look at the most sophisticated investors, I think they're not in it for that short run. They want to have a longer holdout. So they will ask questions around exit opportunities. What are they doing to possibly go for an IPO or a trade sale? Is that in the vision? Do they know who could acquire them? So those kind of questions then arise.
Okay. Probably maybe you can just provide us some example of the industries that these issuers belong to. Like, I mean, do we have like a variety of industries, or do you see a particular industry that's more focused on?
So I think it cuts across everything at the moment for what we see. But what I like now we're seeing is because that cap has kind of been removed. Last time you could do only like a 3 million, then a year, and then do 2 million for ECF. Now they've removed the cap and you could do that 5 to 10 million straight off the bat. So we're starting to see more bigger organizations, people with revenue streams, post-revenue, with profits, some even experimenting that they know they're going to IPO in 5 years from now and dabbling in saying, this is like my pre-IPO round. So a lot of manufacturing, industrial companies are trying to come in and raise that. So it's very healthy. Okay,
that's great. All right. Perhaps I would like to shift our discussion towards a little bit more towards investor perspective. In the report published by Financial Education Network, FEN, also known as FEN, it was mentioned that Malaysians' financial literacy is still considered to be very low, and National Strategy for Financial Literacy was launched in 2019 just to address that. According to the report by FEN, 1 in 3 Malaysians rate themselves to be low financial knowledge. And having said that, improving financial literacy is more important than ever today, as technology making the financial landscape even more complex, and by introducing new ways of investing comes with responsibilities to educate people on it as well. So with that, for those who are new to this platform and first time hearing about ECF and P2P, perhaps Andre, could you shed some light on who can invest in these platforms and what kind of demographics profile they belong to?
Right, this is actually one of the big struggles we have, because this is such an exciting opportunity for retail investors to get involved, which many of them just don't know about yet. So the thing we suggest is basically anyone can participate as long as you're above 18 years old. You can sign up on the platform, and the beauty is you can start with very low minimum investments. Usually you can start out with as low as 200, 300 ringgit and just give it a try. And let's say for P2P, you see returns coming back immediately. You start getting interest for the next month already. And ECF is going to take a couple of years usually until you see some returns. So it's really important for investors to start trying it out with small amounts of money first. You don't have to risk a lot. And along the process, you will learn and you will see the money coming in. And I think in this way, it's very important also to manage expectations between P2P and ECF. What is the fundamental difference? For ECF, basically, you own part of the company. You become a shareholder. But at the same time, that means you can't expect returns immediately. It's probably going to take 3, 4, 5 years at the minimum until you see some return. And very likely you're going to have a binary outcome, which means some businesses are going to fail, you're going to lose all your money, but on the upside, you can make 10 times your investment. Whereas P2P is, as an investor, you will get a steady income stream every month. Let's say 1% return every month in interest, but then also your upside is limited. But as an investor, just go on the platform, try it out. You don't have to risk much. You can start with 100, 200 ringgit, that's enough.
All right. Okay, that's good. I think giving option to investors is definitely great. And in terms of other platforms, like perhaps Brian, could you also share on your platform? Do you have such investment limits that that's set out for investors?
Typically, a general response to that is a no, but the SC actually has imposed a risk assessment or a risk acknowledgement by the investors if they're investing more than a certain threshold, i.e., 50,000. Yes.
Okay.
So if you are not limited, you are not limited, but more on acknowledging that if you are investing, your money to more than a certain limit, then you will be exposed to a certain limit that or certain risk that you are carrying, and therefore it's very important for investors to perhaps acknowledge that risk assessment or risk acknowledgement at the end of the day, in order for them to know that they're investing more than a certain limit. But to answer your question, no, there's no limit to investing in P2P.
All right, I think that's great. So I'd also just like to add on to this, whereby according to a survey conducted by the SC, we observed that investors tend to have unrealistic expectations when it comes to returns of their investments. So based on your experience, like what are the potential returns investors can expect from investing in perhaps ECF platforms? Maybe Bikesh, you want to share with us on this first?
Yeah. All right, so I'm not going to promise any numbers. You're investing in private companies. These are not public market companies, not an IPO, right? So the risk is real. You have to do your due diligence. You have to go in saying, this is money you're willing to lose. I'm not going to lie around that. If this is money you're going to lose sleep over, maybe P2P a bit more safer for you compared to ECF. But the chances of you hitting something that can grow big, that upside is there. So high risk, high gains. I think that's why you start seeing it's a lot more younger people participating in ECF. There's more affinity towards, this is my favorite cafe and I believe in it. I want to put money into that. Returns could be, sometimes they put in some perks along with it, saying, all right, as a founder or shareholder now, you come in, you get a discount for life. They like that. In terms of returns, I would not guarantee anything. Some of them do kind of guarantee some form of dividends, but buyer beware.
Has it been one of the primary concern among your investors? Is something that have you observed, like when it comes to expected returns? Has it been one of the primary concern among your investors?
So it is a primary concern among retail, right? So interesting, the question just now about the demographics. Yeah. It's like 60% over it's retail, the younger people. And then a small amount is going to be high net worth individuals, really small, like 10% the sophisticated. But when you look at the deals, 70% of the deal being funded is from the sophisticated. So they won't ask these questions. They are looking at the financials. They know the industry. They know why they're getting into a company, because they can foresee and know how to plan an exit for them if they're participating in a big round. So they won't be asking for, what are my returns that way. They're in it for the end game of it being an IPO, it being an exit, not interim dividends. They wouldn't ask for that. But the retail wants to see it as a typical IPO related market. And not everyone will be strong enough to provide dividends. So, but now once we start seeing that cap eventually lift, and the bigger companies are coming to us, and these people dare give out dividends annually, which they already do in a private structure. So this might be more than excitable and palatable towards retail investors moving forward.
Okay. I think that's definitely great, and I think, of course, it's going to be an opportunity for them as well. So Brian, would you like to add on P2P platforms? Like what kind of returns we can expect from investing in P2P platforms?
Again, I would not quote any numbers as what Vikesh has mentioned, but I mean, typically, like what Andreas mentioned earlier as well, the return that P2P typically would offer would be more on the stable, kind of like depending on the repayment type. So typically would be on the monthly stable repayment to the investors. When you can expect the return that offered by all the operators in Malaysia are typically higher than the fixed deposit rate.
Maybe I can share a little bit just about our platform. So historically, of course, this is not guaranteed for the future. We've had about 10 to 12% net return per annum for P2P investors. But the thing is, if you're a P2P investor, you can check on each P2P website. Every P2P operator is required to have a statistics page on their website. You can check the historic default rates and the historic return rates, and you can draw the picture yourself where you want to invest, which platform you want to allocate your money to. And one more thing, which is very important, you mentioned people have unrealistic returns. We also see that on our platform. A lot of investors just go for the highest returning investment node. When they see 15, 16%, they put a lot of their money in there. But people have to understand, investors have to understand that those are also the riskiest investment most of the time. And we strongly suggest people to at least spread out the investment across 20, 30, preferably 50 different companies. Let's say if you have 50,000 ringgit to invest, don't put it in one or two companies. Slowly spread it out, 1,000 ringgit across 50 different companies. So overall, you can make a decent return, even if there's a default.
All right. Okay. I think in the same study also, some of the barriers that prevents investors from investing in the ECF and P2P platform is lack of product awareness and product complexity. So how do you think you can make it easier for investors to obtain information from the investment and companies that they intend to invest in? Perhaps, Andre, you can add on to that as well. Yeah.
On our platform, we try to be as transparent as possible. So let's say for P2P and ECF, you know exactly the name of the company you provide the money to, you know what purpose they require the funds for, which industry they are in, you know a bit about the founders. And then we set clear expectations, how much, when you will get repaid and how much you will get repaid. But not just that, I feel it's very important for investors to participate in events like this, in the Invest Smart Festival, to participate in conferences, to watch YouTube videos. SC is really doing some fantastic stuff over there for digital literacy, and also to check each company's website, because most of us, I also saw it on Vikesh and Brian on your websites. We have also some very good investor education on there. We do on our Alexco platform. So read the websites. We explain it in very, very simple terms, and it's very easy for you to get started in basically half an hour.
Okay.
So just to add on a little bit from Andre,
Sure.
As part of the requirement by the Securities Commission Malaysia, each operators are required to disclose at least a minimum amount of information for the investors to make an informed decision when they are investing into either an ECF or P2P. So like what Andre has mentioned, if you're planning to get started on ECF or P2P, do check out the operator's website, and you can always go to each individual investment node and do more due diligence.
Yeah, on this, what we try and do is, because we are also investors, we have a venture capital license and we invest into companies. So there's always ways to kind of compare apples to apples in a way, but not really. So we get the issuers to at least put it into a template, right? The pitch deck. So then we have sessions to educate people about how to understand what they're being pitched. Like, where would you look at the growth of the company? Where would you look at the returns of the company? Where would you see what the shareholders are, who they are, what is the plans, the assumptions they're making? So you come up with a structure that when they look at one and they look at another, they learn how to benchmark companies and then feel comfortable in what they want to put in. But like the other said, everything about the investment is on the website, from even the audit, their financials. So if you're not sure and you don't know what to ask, then maybe just come and join one of the pitching sessions that we always do with issuers. And this is where you can just state that you don't feel comfortable, you don't understand a certain thing. And the founders will be so willing to share and educate you about their business to basically have you on board. So feel free to ask, and you should always join the sessions and ask questions. I think people don't ask enough. That's the issue.
Yeah. Definitely, I would agree with that as well. Also, earlier I mentioned about product complexity, right? Like some people may just, without even knowing the product, they may already have a perception that, ECF and P2P are only meant for certain type of demographics, and, they would not want to venture it out by themselves. And if, like, for those who intend to come in and, want to like learn more, like, as you said, you have enough sufficient materials on the website, or in fact, can have a conversation with the issuers themselves. And perhaps, is there any additional extra effort that has been put by your platform to make, in terms of visually more appealing, or in fact, in terms of information wise, like, it's more crisp and, straight to the point kind of, and those kind of effort? Because as you can, for now, right, most of us, or rather most of the investors out there, I think they want information as soon as they look for it, right? So they want it simple, they want it, straight to the point and all of that. So they don't want to read any long pages of documents and whatnot. So for your platforms, is there any intended effort that has been put in place here?
For us, it's mainly the pitch deck, right? So the pitch deck is the summary of the entire deal. So everything you need to know about that whole slew of documents they have is summarized in that. So look at the pitch deck, and that's way enough.
Yeah. And for us as well, we have the fact sheet equivalent to like a pitch deck. So in that fact sheet, we have a brief information about what are the businesses of the investors the issuers are doing, as well as a bit of snippets of their financial information and the sector that they are in. And I think the most important part as well is the session that we typically invite the issuer to briefly share with the potential investors in understanding what are their business or what would be their growth plan in the future.
All right. I think there's an element of human interaction there. I think that's definitely would be helpful for investors who are seeking for information and when making decisions, of course. So I'd just like to probably touch base on this investor statistics, perhaps, like when I looked at ECF and P2P platform, which was actually produced by the SE. As of Q2 of 2021, 46% of ECF investors are below 35 years old, and retail investors made up of 63% of investor base. So similarly, majority of P2P investors is also below 35 years old, accounting for 87% of total retail investors. So what is it that draws young investors in particular to P2P financing and ECF? Perhaps Brian, you can start off first, then I would go to Andre. Yeah.
Okay. I think typically the younger ones are more receptive in exploring new or different types of investment or financial product out there in the market. Therefore, I believe that they are more receptive in assessing so-called like P2P and ECF. Similarly, in our platform, our demographic also is mostly dominated by 35 and below. And they make up the majority number of investors that invest in our platform. I think the other part as well that it's very interesting, taking from what Vikash has mentioned earlier, I think the younger crowds, I think they have more goodwill when they can relate to what they are investing on. For example, your favorite cafe or your favorite e-commerce platform. So they have that sense of goodwill that they would replicate again to say investing in our platform. So therefore, I believe that would be one of a few factors that influence the younger demographic to invest in our platform.
Okay, perhaps Andre, would you like to add on to that? Yeah.
We say exactly the same trend as Brian has mentioned. So they're a lot more willing to try out new investment products and to just put in a small amount of money. So they're just willing to play with a few hundred ringgit, see if it works. And if it works, then they allocate more money. But that being said, we also have a few quite substantial older investors on our platform. Unfortunately, the numbers are few, but actually this demographic can benefit a lot, especially from products like P2P investing, also from ECF, because they are dependent, they have to supplement in a lot of times their retirement funds. So one way to do that, to actually boost their portfolio returns, is to not just have bonds and stocks in the portfolio, but maybe to consider ECF as a booster to the stock portfolio for higher returns, let's say with view of 5 years, and the P2P as a boost to the bond portfolio, where you can get a steady cash flow of 10% or 12% per annum to supplement your retirement income. Actually, this group we would really love to welcome on our platform.
Okay. Just also maybe do you find there's any kind of reason why the older group may not be the platform or be more interested to invest in ECF and P2P? Is there probably, I can probably now think of, like, is it the limitation of technology? Would that be a reason, or do you think there's any other reason besides the one that you've just mentioned? Yeah.
We've certainly seen many older people still struggling even with very basic things like signing up. So even for those things, we had questions from this demographic. And then they asked a lot of questions about how the process works. And they still have to get the feeling of this whole digital infrastructure. I think they're more used to dealing with banks for the whole of their life. So it takes some time also for them to trust anything which is new.
Okay. Yeah.
I think just to add on to Andre a little bit, I think the older you are, I think, if you are referring to the risk assessment from the age profile, I think the older you are, the recommended things to do is to take on less risk in a way. So you go on a more stable, more fixed kind of return rather than go short to equity as compared to the younger ones. So I guess that one also tied on to the age profile. So the older they are, the more security that they want to look for in investing in certain type of asset class. But the good thing is that even if you look back into the statistic that you have shared earlier, 60% consists of 35s and below, while the remaining, it's about 40%. So I would say that 4 to 6 kind of ratio, I think it's still pretty interesting. It's not saying that the 40% actually is very, very small. So the good thing is that I think the older generation, yes, they might encounter like certain hiccups when they try to sign up or when they're trying to look for information. But in general, they are actually quite receptive in a way that they want to see what kind of offering or return that they can get from ECF and P2P in order to balance out whatever investment that they have on hand.
It's interesting that you mentioned about risk right earlier. So I would just like to perhaps sway our discussion a bit more on risk management. So as we all know, basic rule of investing is simple: the greater the potential reward, the greater the risk. So investors need to be mindful of what they are getting into, no matter how attractive the package looks, right? So for instance, should the investors look at portfolio diversification, company volatility? So what are the advice you can give to our investors when it comes to managing their risk? So I think especially when investing in P2P and ECF platform, perhaps Prikesh can shed some light on this for our investors.
Yeah, so they have to do their due diligence, right? So all the documents are there. So it's easier for someone who's more sophisticated angel. They're seasoned. They know what to look for and what to ask, how to look at the documents. The retail, even though you give them the document, it's like giving a retail person the IPO prospectus. I don't even think they know which part to look at. They'll just be bullish in terms of, wow, people on Lawyat Forum is talking about that. I guess I'll get into that. So that's, of course, a very big risk. So what we started to do was kind of create an education series. So we're bringing angel investors seasoned on ECF, but also just investing on their own, to come and educate people on how to invest. What do they look at? If you were to do a portfolio, how would you concentrate on something or diversify in something? I mean, if you're not Warren Buffett, then you wouldn't know how to pick your bets. So I wouldn't say that you're going to actively concentrate on building a certain kind of portfolio. This is that needs some kind of level of expertise. So you may want to just diversify to be safe, to put in a little bit of everything, like what Andre was saying, right? If you have 5,000 to split, put 1,000 into 5 companies. Don't put 5,000 in one if you're not sure. So those kind of means is what we're trying to educate people. But in short, you need to do due diligence. As a platform, I can safely say that, you know, we are one of the kind. I would say that we are very strict. If you look at Lead Capital, we're the latest on the block to do this. We've only listed like maybe 5 deals, but we've said no to 197 deals. That's what we've done. So we're doing strong due diligence and putting on our investor hat. Would I invest in this? If our company would not invest in this, we dare say no to issuers and not just be a platform to raise for everyone. So we've done some, but we still expect you to kind of add on to that.
That's interesting. I think with that also brings me to my next question. So I'm sure many investors have thought about it as much as we want to remain confident. And I have to say that we will definitely be expecting late payments or defaulters, you know, by issuers due to our current situations as well. So how are investors protected in the event of default by the issuers, and what are the responsibilities of operator, company, as well as investors? Perhaps Andre, you can take this question.
Right, as platform operators, first of all, our first step is really having a very intensive due diligence process, similar to the one Bikesh has mentioned, which is we already try to avoid defaults in the first step by selecting very high quality issuers in the first place and rejecting more than 90% of applications. But in case there should be any default, then we have many steps in place how to recover those funds. Different platforms have different options in place. Some have insurance, but then you get also tremendously lower return. Or in case you want to go for the high return non-insured, in this case, we have personal guarantees from at least 2 to 3 guarantors, which we can enforce and which we have enforced. So actually about 70 to 80% of defaulted issuers have repaid their money completely to us. Enforcement has been very good and relatively fast, I have to say. So we managed to keep our overall platform default rate at 0.9, less than 1% of all deals have defaulted now, which can be considered one of the lowest in the industry. So it's not like, it's not that we don't care about your money in case there's a default. We really take all the legal steps possible to recover your money. And in case we have some assets we can collateralize, we will also take those.
Okay. So what if, like, for instance, a company is in a very tough situation, right, and a difficult, challenging situation? Like, do you actually consult or advise them in that situation? Like, do you give to, you know, I think it also relates to my earlier question on what kind of support that do you provide to, you know, such companies that are already existing on your platform?
Absolutely. In most cases, we offer them a refinancing to a longer tenure for their existing notes so that they can at least bridge the short-term suppressing situation or challenging situation they might face at the company. And we closely discuss with them how much they are comfortable to repay, because we see a lot of times they ask, let's say, for 1 million ringgit, but then we can tell by their bank statements that they will not be able to take on more than 300,000 ringgit. And usually they're very happy that we give them this kind of consultation to not to have a too high debt load, which is going to drown them in the end.
Right. I think with this, I think, of course, investors will have some kind of confidence, of course, you know, in terms of, you know, the efforts that's taken by the platform itself to ensure that, you know, the investments that investors are investing in, of course, it's been looked after, and as well as, you know, assistance are even given. So in terms of, you know, this is eventually creates investor confidence to even come into this space, you know, when if they know that, you know, this is something safe for them to do so. So of course, all of us, you know, want to, you know, make the most out of our investments, right? So just to quickly, you know, if we were to discuss on, like, in the event investors are making a substantial return from the investments in ECF, for instance, do the investors have to pay tax on their investment returns? Bikesh, maybe you can go for this one.
So yeah, I don't think so. There's taxes on capital gains at the moment, so that's the thing. And now also for ECF investors, there is a tax break on how much you invest in, and it's capped at a 50% after a 2-year period. So a lot of incentives in terms of investing into ECF.
That being said, if you're a foreign investor, especially, but also as a local investor, always check with your tax advisor, since we're not allowed to give tax advice ourselves. And in case you're a foreign investor, a withholding tax will apply to the capital gains you make, especially for P2P investing.
Okay, that's very informative.
Yeah.
So,
sorry, just one more thing to add just now about, in the event, how you get protected. So I think there's something also investors should look at. What are the instruments being offered, especially for ECF? Are you getting ordinary shares? Are you getting preference shares? Because if you're getting preference shares, then of course, there is some form of benefit to that. In the event, a likelihood of some liquidation that actually occurs, then at least you have some protection in terms of, getting some parts of that money back if possible. But if you're ordinary, you're going to be the last one to basically get some returns. And that will be quite difficult even for a flat platform to help you.
okay. All right. Before we move on to the Q&A session from the attendees, I would also like to highlight that recently there's been a number of capital market licensed and registered entities have lodged reports on the cloning of their corporate identities by unknown persons or organizations. So these fraudsters use names, logos, and credentials, fake websites, and other details of a legitimate capital market intermediaries to promote their investment schemes via especially of course via social media channels like WhatsApps and Facebook, promising extraordinary returns with little or no risk at all. So I would just like to understand, beside investment risks, this is also considered as other potential risk, right? So associated with the platforms like ECF and P2P. So perhaps Andre, you can share your experience and view on this.
Actually, this is interesting, since a couple of years ago, I think about 2 years ago, we had one such case for our company where someone tried to impersonate Alexco. They used our logo and they approached people on social media trying to solicit investments and trying to offer financing to them in exchange for a fee. So investors have to be very, very about this. We immediately informed the SC about it, and we saw also many other platforms having had the same issue. Yeah. That's especially fraudsters use social media platforms to create similar looking accounts and then approach people unsolicited. So whenever someone approaches you from a platform and you have no memory of signing up on that platform, this is very important, then it's better not to reply or better to ignore this message, and never transfer money just to some social media account or someone asking you for money from there. This is very, very important, and not just to avoid fraud in general, but also for your own safety, because there will be very little possibilities for legal recourse, and the SC will not be able to help you very much in case you deal with an unregulated platform.
I think with that,
I'll just add on to Andre a little bit. I think it's important for investors to know where to look in the operators or offering that it's available in Malaysia. The way that I remember it easily is that in Malaysia there are practically two websites or references that you can look for. The first one, of course, is Bank Negara Malaysia, or BNM. And how I remember it is that the B in BNM for banks or the bigger financial institutions. And of course, the last one, not forgetting that it's governed under the Securities Commission Malaysia, or SC. And again, how I remember it easily is that the S in SC meant for, say, specialized operators like P2P and ECF. I think that goes a little bit, or give a reference or guidance for investors or financing community in Malaysia to look where to look in terms of the legitimate operators and financial products in Malaysia.
Yeah, the SC website actually lists all 21 operators on their website under digital initiatives, www.sc.com, and you can check out all of those. And if you don't find the name there, probably this platform is not registered.
All right. Okay, just to add on to Andre and Brian, so I would also like to take this opportunity to remind investors to always exercise due diligence when considering investment opportunities, especially those promising extremely high returns with little or no risk. So investors are also encouraged to verify the status of individuals and companies offering investments via SC's website, and of course through the operators as well. So perhaps there's such instance where investors wish to lodge a complaint. Maybe you can tell us a bit more on where can they go to, or is there any avenue for the investors to lodge on your platforms itself? Maybe Brian, you can take this question. Yeah.
Well, in our website, you can always write on to us. We have our customer service email that investors can reach out to us, or our registered WhatsApp number that is always open for investors, issuers, or everyone who sees that there's a potential scam going on.
Yeah, same. Even as you know, I think all of us have a page on the site for you to do any particular complaint or inquiry, and we have a WhatsApp number too. You can, and in fact, most of the communication is always via WhatsApp.
Okay, all right. I think this discussion has been very insightful, and definitely, most of our attendees could definitely benefit from this. And I think it's time for us to get some questions from our attendees. So let's look at the first question. Okay. All right, so the first question is on whether there's any Islamic notes that investors can invest in. So this was perhaps Brian. Do you have any Islamic notes on your platform, or maybe you can generally say how does P2P platform itself provide this kind of notes? Yeah.
Okay, I'll answer the first question first, Darwin. Unfortunately, our website or our platform doesn't offer Islamic investment, not yet. Okay. I think you can refer or you can look into a few available operators outside there. I think they do offer Sharia compliant investment and notes. Yeah,
but perhaps maybe what you can, maybe what you can share is based on your experience. Like, has there been any demand on these areas as well? Because I think that's of course lately there's been new platforms that come up specifically emphasizing on Sharia compliant issuers and all of that, right? So do you think there's a demand there, and what's the future like for this kind of offerings?
Okay, we have an inquiry from both the issuer side as well as the investor side, asking about Sharia compliant investment note or whether they could invest, or for the issuer side they could actually take a financing on Sharia compliant investment note. Okay, I think potentially in the past, say recently, I think in the past 6 to 12 months, we have seen like a lot of inquiry in regards to this type of Sharia compliant note. And in fact, there's quite a bit of emphasis in terms of investing into this Sharia compliant investment note, particularly from a lot of angles that I think there's a lot of promotion given as well by the regulators in the past, say recently, in pushing the Sharia investing and Sharia financial product.
Okay, all right. So the next question, I think someone has asked, like, does having good following increases their likelihood of getting funding? Does it have any kind of impact or effect on the issuer's point of view? Perhaps Bikesh, maybe you want to take this.
Yeah, that's a really good point. We find that people that has a good following, partners or customers, it's very powerful how you can use this ECF platform to convert your customers to investors. In fact, for the case that we did a recent raise for Akru, we even saw how their investors became customers after that. So ECF is a powerful tool to kind of have someone to become your ambassador. And once they have a stake in you, the likelihood of them going to compete products is very low. They will be like singing praises of you and selling you all the time. So very powerful instrument to basically use.
Okay, I think time is almost up. So I'll just quickly wrap up our discussion with some key tips, I think, from the discussion that we have had. So when it comes to investing in ECF and P2P platform, firstly, know where ECF and P2P stands in your strategic asset allocation, and ensure you do your due diligence on the investment and company that you're investing in. Make sure the platform is registered and approved by the SC, and monitor how your investment is performing. And finally, diversification is key. So I would like to once again thank our fellow panelists for sharing some insightful information on ECF and P2P from both issuer and investor perspective. Thank you once again. Be safe and be well until we meet again. Yeah, thank you. Thank you, everyone.
Thanks,
Thank
everyone.
you.
Thank you.
Thank you, everyone. Cheers.